Your credit score is made up of 5 different parts, and they're not weighted equally. That means you need to know which parts have the greatest impact. Number 5 is new credit. This tracks any new lines of credit you may open, whether it be a car loan, a personal loan at the bank, or a new credit card. This makes up 10% of your overall credit score. Number 4, mix of credit. This tracks the types of credit lines you've utilized throughout your credit history. Banks are typically looking at this to see if you have a diverse history of credit usage. This makes up 10% of your overall credit score. Number 3, length of history. This tracks the average age of your credit lines. Basically, how long have you had credit? This makes up 15% of your overall credit score. Number 2, capacity or utilization. This tracks your credit card or your credit line's available balance. What the bank wants to know is how much of your available credit have you used. A good tip to remember is to stay under 30% utilization. The reason being is because this makes up a big chunk of your overall credit score. 30% of your score comes from credit utilization. And the number one item that impacts your credit score is payment history. Basically, have you been paying your cards on time? What they're looking for to see is if you have on-time payments. This means that you don't have payments that were made after the 30-day grace period. Typically, a credit card or company is going to report on you after you are 30 days late in most cases. If you do get a mark for being late on a payment, that will stay on your credit history for 2 years before it actually falls off. So it's a very important factor you want to hit because it makes up 35% of your overall credit score. Thank you for listening, and if you like what you heard here, make sure you hit that subscribe button.